Good morning to all IPS students and guests. Today we have a very important topic. It is called as actually our subject in the syllabus, practical GST. What we call it as a overview of GST, it is a practical approach towards the GST. We have a eminent practicing tax advocate in GST. His name is Sri MVL.Narasimha. He is well qualified. He is a MCOM, MBA, LL.B, and he has been in this practice from 2000. Means almost all 22 years. He has a wide network, and his areas are direct exports, deemed exports, merchants exports, inverted duties, and he is also having the services in income tax, GST, TDS refunds, income tax and GST filings and registrations, consulting, and also accounting, assessments, auditing, legal opinion, appeals, department representation, and business accounting, auditing, MSME, and he's also for a project financing. He has got many clients, starting with SMEs and the large sector companies also. He has got a very keen interest to educate our students on this practical GST. I want you to take advantage of this session, and if you have the doubts, he'll be there to address all the doubts of the students. So have a good interactive meeting with the speaker. So now the floor is handed over to the speaker. Yes, sir.
Thank you, sir. Thank you very much for it's a wonderful profile for me. Thanks for that. Just we go for start for a general GST. The basic of the GST. Just I want to start. Before that, just we have to pray for Lord Ganesha, and it's my guru. We start with my guru. It's we generally start for that. It's Guru Brahma, Guru Vishnu. So before start any meeting, so we start. It's a Guru Brahma, Guru Vishnu, Guru Devo Maheshwaraha, Guru Sakshat Parabrahma, Tasmai Sri Guruve Namaha. Similarly, we pray to the God like it's Ganesha. We start with Suklam Bharadaram Vishnu, Sisivarnam Chaturbhujam Prasadnavadanam Jhaye Sarva Vignopashantave. Agajana Padmarkam Ghana, Agajana Padmarkam. Agajana Padmarkam Gajarana Mahanesam, Anekadanta Bhaktanam, Ekadanta Upasana. We start with it's Ganesh, and you straight away you go to the GST. Now it's my topic. It's a overview of the GST. It's a very simple. Students, I give it in a very simple way.
Excuse me, sir. So this voice is low. Can you?
Yes, sir. Yes, sir.
Voice.
Yes, yes. Now it's okay. Yeah, audible now.
Inconchum.
Yes, sir. Right. Fine.
Okay. You can keep it at the maximum. Thank you.
Okay. Overall view of the GST, and since we know that the GST it came almost all first, so now it's a 4th year, it's a 12th month, it's running now, almost all 5th year old. Now almost all whatever it's now it's a streamline of GST almost all. Earlier in starting there is some problem in very initial stage. Now it's everything it's going very smooth and soft. Overall GST in overview of the concept. Actually, GST it's the 2000 year of 2000. It started in Atal Bihari Vajpayee government. It's just conceptualized. Just that day we have just committee, and they want to start with the 2000. Then after 16 years, what happened? It's after 16 years in opposition and all this. Now it comes to it's a 1st July 2017. It's GST bill has been passed. So basic that is. Now there is on that it's a 4 bills. 4 bills. It comes to central GST and state GST and UT GST and GST composition. This is the 2017 it started, and 101 in the 101st Amendment Bill and introduced in goods and service tax in India 1st July 2017. So students, now it comes to what is GST. We have to tell if anyone idea about that in a GST. Just you tell me that. Just you raise one hand, and accordingly we'll just give the answer for that. So
The
anyone,
students, you can unmute the mic and then talk to him,
yes,
because he's also having an interactive session.
yes,
Yeah,
sir.
please unmute and
If anyone having any, just little bit about the GST.
Sir,
yes,
Sir.
yes.
Yes, sir.
GST is nothing but it is an indirect tax,
Yes,
which is a destination-based tax. It is a destination-based type of tax, which is levied on manufacture, sale, and consumption of goods and services.
correct. You are right. Perfect. Now, GST is a consumption-based taxes. Consumption-based. What is the meaning of consumption? Where it is consumed the goods, that it's a liability on that state.
Hmm.
Okay. And coming to the earlier, we have amalgamation of before STY law. We have in so many laws. So many laws like that in central taxes is there in central tax, addition tax, and central excise service tax, and special additional duties, surcharges, cesses. All this is there is a central taxes, and sales taxes. It is state taxes. It comes to VAT, entertainment tax, luxury tax, state tax, entry tax. All these come under. Now it comes to the GST. What is it? GST, goods and services tax.
Service tax.
Right.
Yeah.
All this amalgamation of all these taxes, it comes to one tax in all over India, one tax, one nation. This is the basic fundamental of this GST. One tax, one nation, one tax, one nation. All over India, one tax. See, earlier we have a number of tax rates are there, but all over India having one tax, like 5% all over India is the particular goods are only 5% of that, or that particular goods in all over India, it's the same rate and same tax. That is the fundamental one tax, one nation. Now, just I go for this, a brief of this. Now I'm going to the PPT. We start with the PPT, sir. Sorry, give Prakash sir, just due to the mind.
Yes, yeah. Me, you are as a post only.
Yes, sir. Screen, share screen.
Yeah.
Yes, sir. I start with
Yes, yes, yeah.
yeah. It's an overview of the GST law and procedure. So just I take some important topics only. Overview of the GST, important definitions only for only students based. I have taken its only important definitions, not for its total all definitions of section 2. It's only 121 definitions. Out of that, I have taken only few of the important decisions I have taken, and total it's a 21 chapters. Out of that 21 chapters, 174 sections. Out of that, I have taken only few chapters, 5 chapters of the important for related to students. That is very important. So only 5 chapters, and ITC and registrations, accounting and records, and returns and refunds. Okay, next, the basic. 1 minute, sir. Yes. The concept of the implementation of the GST and service tax was a historical movement, right? It's a marked and significant and indirect reform of the country. This is a historical. So last 16 years and last 2000 onwards, we have tried to implement the GST, but So after 16 years, we got the GST, that one. And coming to the GST is capitalized in the Atal Bihari Vajpayee government in 2000. And after 60 years of the opposition, India launched the closure of the unifixed tax regime of Lok Sabha, passing the supplementary legislations. Right. Now, just now I have spoken, already I told to you, this is a overall government, it's roll out the goods and service tax in the four ways. That is a CGST and integrated and UT and CGST compensation. Now, this is the, so we don't require, but it is the basic important to share this in constitution. If any bill or anything, it's amendment in the new act, the constitutions, it's important. So anything, it's a constitution of India officially. So there's a 101 Amendment Act 2016 introduced the national goods and service tax in India on 1st July 2017. If anyone to either if you want to collect the taxes or if you want to do any amendments, so first we have to go for constitution, and then in amendment in constitution, then you have to implement that. Okay. Now it's a 1st July 2017. It's a GST has implemented. So amalgamation, this is very important. Large number of taxes. Just now we discussed into single tax has resulted the big advantages. So below specify the taxes which have been submitted in CGST and SGST. Now it's a overview. It's a how many it's there in central taxes. Central taxes of central excise duty, additional excise duty, excise, service tax.
Excuse me, sir. Are you changing the slides?
Yes, sir. Yes, sir.
No, because it's not, the slides are not coming. It's only your name is there. The first slide.
1 minute, sir. 1 minute. 1 minute, sir. The slides are not moving there. No, it's not moving. Here moving, but there they're not moving. So we are here. It's a problem, is there? Sir, just you check it in your end, sir. See,
Okay, now it's coming. Yes.
Now it's coming.
It's coming now. Yes.
Yes, sir.
Do it. Yeah.
Yeah. Now it's coming now, sir. It's okay.
Yes. Shortcomings removed by GST heading.
Yes, sir.
Shortcomings removed by GST.
Right. Now it's a GST on its overview. We have in a central tax. Erstwhile law, we have so many laws, so many acts and so many state taxes and so many central act and all this. Now it comes to amalgamation with all the taxes in the state and central. It has taken its only one tax. It's a GST, goods and services tax. So what are the taxes of central taxes? Central tax duty, additional excise duty levied, and service tax, additional customs duty, commonly known as the CVD, and special additional duty and surcharge and cess and in the central tax. As well as it's a state also, it's a VAT, entertainment tax, luxury tax, taxes of lottery and entry tax. These are all taxes in the amalgamate and accumulate subsummed into the one tax, that is a GST. Right. Forward. Now it's a GST, the applicable in the supply. Here too, earlier it's erstwhile law. We are comparing with both the erstwhile law and the current present law. Okay. Services. That now we have to call, earlier it's a sale of goods. Sales, we call the sales. Now it comes to the supply of services of goods, and of course the concept of the taxation of goods, manufacture, sale of goods, provisions of the services. This is the concept. Right. GST, the destination place. Just now we discussed the destination base. What is it? Now, the intrastate level, when the goods are traveling in the state, within the state, suppose say in Telangana to Telangana, if you move the goods, it comes to intrastate, right? The same similarly, if the goods are moved from Telangana to Andhra, then it comes to intrastate. This is the major tax in GST, that is CGST and SGST and IGST. Now, this is the only theory, and practical also will tell you how to do this. Now, so this is a shortcomings removed in overall GST. This is very important. So earlier we have a very difficult, all these cascading effects, excise duty, manufacturing point, complexity, lack of uniformity provisions in the rates, See, it's a earlier we have a uniformity. There is a software. We don't know what is the rate. Similarly, in restaurant, what is the rate we have to pay? The service tax, either the is a sales tax. We don't know. Actually, there is some ambiguity is there. Now it's all these shortcomings removed by the GST and the interpretational issues, narrow based and complexities. Oh, there's a Constitution 279A Constitution provides the formation of the GST Council, the apex body, and so on. So now all goods are almost all except alcoholic and these petroleum products. So out of this GST, now why it is the students, why it is alcoholic and these products like that, it's out of the GST,
Sir, excuse me, sir. Are you changing the slides, please?
Yes, sir, I'm changing, sir.
No, only this one slide of shortcomings removed by GST is appearing on my screen. Kindly check into that, whatever, because that appropriate slide will enter.
Now it's moving, sir.
No. Yeah. So kindly, please have a look at the slides so that the students can spot it. Okay.
Right. Now, before moving just change the slide, just I am. Okay. Now it's a GST over. Now it's a shortcomings. Now it's okay, sir. Clear? Shortcoming of the removed by the GST, right? Hello.
Whereas GST and overview Article 279A and only.
Yes, sir. Now it's a Article 279 of the Constitution of India provides in the formation of the GST Council, it is the apex body, decide all the policies and rest. Now, the 279, it's a new article. It's a Constitution of India provided in the formation of the GST Council. Apex body that decided all the policies in respect of the GST. GST means the supply of goods and services are both except the taxes and supply of alcoholic liquor and human consumption. Now I'm changing the new slide, sir. It's coming. Hello, sir. Some disturbance, it's coming. So I saw that it's not coming. Where's the problem? What's problem? No, it's there is no voice also. Yeah, sir, there is a problem with you only, sir. Hello, sir, is audible?
No, sir.
Audible, sir? Oh, so there's a problem in cover. So, come. It's not coming. Zoom. Now it's audible, sir.
No.
Sir, it's audible now. So there is a disturbance, it's coming. Hello. Your screen sharing is fast. Stop sharing. Resume the slideshows. Sir, this your default microphone has changed.
Yeah. Okay. Good.
Hello.
Yes, sir. You can take it.
Yes, sir. Yes, sir. Now it comes to the Article 279 of the Constitution of India provides for the formation of the GST Council. It is the apex body. It decided all the policies in respect of the GST. 279 Article 270 implemented in this is as per the Constitution. So new act it comes to the goods and service taxes. Why it's except that supply of alcoholic liquor and human consumptions defined in 366(12) of the Constitution. Now it's a uniform, therefore, in the taxpayer, and they also create the common shared IT infrastructure. It's a goods and service tax network. So this is also it's a formed by the company. It's a non-profit organization. Actually, we'll come to the picture. The students now it's exactly what we want to say. It's what is goods and service tax. So goods and service tax is the supply of goods and services, both except the taxes of the alcoholic liquor and petroleum products. Why except the taxes of the human consumption? This is alcoholic liquor and petroleum. Are you hearing? Students, I have raised one question. No. Now that the word use the supply not for sale, that the stock transfers, branch transfers also get the covered and GST net. Prakash Garu?
Yes.
Sir, it's going on. Slides are moving now.
No, it is only one static slide is there. What is GST? And
Yes,
in that is a picture with a one tax for manufacturing, trading, and services.
Yes, sir. Yes, sir.
One nation, one tax.
Yes, sir. Yes, sir. Now, so what is the goods and service tax? Though earlier it's we call it a sale of goods and sales tax and all this. Now in GST scenario, it comes to the supply, and also earlier it's a dealer and a dealer. We call that now it's a taxpayer, right? Now it's the word used in supply, not for sale in the GST Act. The stock transfers, branch transfer also will get covered under GST net. Now, what is GST? So one tax for manufacturing, trading, and service, all put together. Earlier, it's a trading, it's a separate manufacturing, and this manufacturing, if you do the manufacturing, you have to pay so many taxes, excise, this, and it comes to state, again, VAT have to pay. Now it comes only one tax, one nation, all these categories of manufacturing and trading and services. Now, GST will be payable of free supplies made to the treated. It's a GST will be the payable of the free gifts and free supplies, samples and unrelated person. But overall, so if you give the any free samples, then we have to, whatever ITC we have accumulated, that we have the respect of such goods, we have to reverse. So I come to that full picture of this ITC also. We have a separate chapter for that. IGST will be the payable on the interstate stock transfers and branches. Earlier, suppose say in STY law, it's a VAT. If you transfer the stock transfers or branch transfer to other state, we have to liable, it is exempted. So only some declarations has to give, and you take that, for that we get some exemption. Now in IGST mode, so we are liable to pay this IGST tax. That's interstate stock transfer also, branch transfer also liable to taxes under GST Act. For stock transfers and branch transfers within the state and GST, CGST will be payable only when where the taxable person has more than one GST registration in the state. Okay, now it comes to this point. Suppose if we having the vertical registrations, suppose we have suppose I'm X person, I'm having two registrations like that, it's vertical. I'm doing some three type of businesses. I have a different registrations within the state, then we have to liable to pay the taxes. If there is no, if you have only single registration within the state, then there is no liability. Just we have to give the bill of supply, the transfer of the goods from one branch to one branch. This is very clear. Now overall structure of the goods. The supply of the goods and services both with effect from 1/7/2017. That is including Jammu and Kashmir. See why it is Jammu and Kashmir 8/7/2017. So only 7 days is late in for the implementing of the Jammu and Kashmir area, and it comes to the sea 200 nautical miles inside the sea. India is the purpose of the GST. Now, rate of taxes. Rate of taxes 0.1%, 0.25%, 3%, 5%, 12%, 18%, and 28%. In case of supply within the state, suppose if you supply the goods within the state, CGST will be 50% and SGST or UTGST of the 50%. If you transfer the goods, if you supply the goods to other state, you have to pay the 100%, that is IGST. Now again, last time just we discussed destination based. What is destination based? Destination based consumption tax. Tax would be accrued to the state, which is also termed as a place of supply. So let us we discuss about this point. So POS, so supply of services, the location of the supply, and POS, place of supply. Suppose take that two states, suppose Tamil Nadu and Karnataka. Suppose LOS, location of the supply is Karnataka, and supply of the goods to the POS, place of supply to the Tamil Nadu. Now the destination is where it's a destination is the goods are consumed at their place in Tamil Nadu. Similarly, the ratio of the central government is funding the transfer to the share of the tax portion to transfer to the Tamil Nadu only, right? This is that is called LOS and POS, location of supply and place of supply. GST will be based on the VAT. That's very clear. Now it's a GST based on the VAT system. Now earlier it's a value added system. For example, I give the one example. I supply the goods to the some X percent. Suppose say 100 rupees, the tax rate is 18%, right? Now 100 rupees into 18%, it comes to 18 rupees. The same goods, the B person, he supplied the some Z person. So 100 rupees, so he is adding some 20%, it's 20% is adding his profit, 120 rupees, and 18% again he is charging. So how much amount he has liable to pay? How much amount? The difference of the portion. Suppose earlier we have ITC, the earlier whatever it's 18%, you take the ITC, the difference 20% portion, whatever is there, on that you are liable to pay the second person, right? Now the states which is the goods supplied will not get the any taxes. Goods are consumed in another state, right? In case interstate supplies of IGST will be payable, input credit and IGST paid in one state will be available to the receiver, goods in the another state. So interstate supply. So interstate supply means ITC, IGST paid in one state and will be available in received the goods, services another state. Yes, it's coming to this point. IGST, it's a supply the goods to some one state to another. So earlier, similar, it's like of CST. CST in erstwhile law CST, we supply the goods to one place, one state to another state. We cannot avail any ITC. We cannot take the ITC. But in GST scenario, the IGST, what we have collected, we can claim that ITC also. It is similar to VAT system. It's similar to in earlier, whatever is there, the similar lines to GST also. But one advantage here, it comes to the IGST, we can avail the ITC also. So dual GST of supply of goods and services within the state, there will be a dual system, that is GST and CGST, supply of goods and services with the state article 246A Constitution of India, inserted in 16/9/2016. So now coming to the next slide, SGST will also have the UT and having the legislature, these are Delhi and Pondicherry. Now it comes, this is very important. How many we have a UTs, students? So I have a raise one question to you. Just how many UTs special category of states? Anyone know that? So anyone know that it's how many states are in special category? No.
7, sir.
Hello? Yes, sir.
7, sir.
7. You tell me the 7.
Andaman Nicobar.
Yes.
And one is after Kakinada, there will be there one. I don't know, sir, exact what is that names.
Yes. Okay. Now there is a 7. It's a Andaman Nicobar and Chandigarh, Dadra Nagar Haveli, and Pondicherry, Jammu and Kashmir, and Ladakh, and Delhi. Out of that, only 5 we have a special categories. 2, Delhi and Pondicherry have a separate assembly. So they were charging the CGST and SGST only. Other than other category states are charging CGST and UTGST. So these 5 only have to charge UTGST. Remaining all it's FGST, and they have a separate territory. There is a separate assembly. Oh, hence it's only 5 categories of the special categories charge only UTGST. That's why the FGST will also apply. UTGST having a legislature, there are the Delhi and Pondicherry. FGST also will apply. And CGST, SGST will the supply of goods and services within the state. Right. So coming to this, CGST and SGST will be supply the goods and services within the state. Just IGST, there will be integrated, imposed by the government of India, 269A, Constitution of India, inserted 16/9/2016. Will also be imposed on the imports of explanation of Article 269A, Constitution of India. Now, what is the IGST rate? What is the CGST? Rates are supposed to say, suppose 18% of the tax rate, right? What is the IGST rate? So it comes to 18% of this actual goods rate. So CGST, how much they charge, and SGST, how much they charge, and IGST, how much they charge. So IGST is the interstate, so we have to charge in 18%. Where it comes to the local, supply of the local within the state, now it comes to divided into 50%. SGST 50% and CGST 50%. So this 50-50 out of CGST, it goes to the state government, and CGST, it goes to the central government, right? Again, IGST also, it goes to the central government. One thing I tell you, government means it's only center, very clear in GST Act, government means only central government, right? IGST and CGST taxes will be uniform all over India and will not vary from the state to state. Presently, SGST rates are also uniform all over India, are equal to the CGST rate, right? Revenue from IGST will be apportioned among union and states and parliament on basis of the recommendations of the Goods and Service Tax Council 269A and Article 271A, Constitution of India, inserted in 69/2016. The appointment will be required in ITC. The IGST can be used in the SGST and vice versa. Now, it's a very good point. This, sir, are you catch my these points? It's a sliding is going on, sir. So updating the slides also, it's coming now, sir.
Slides are not moving, please.
Now it's what slide do you have, sir? It's a GST on overview.
Same thing. What is GST? One tax for manufacturing, trading, and services. One nation, one tax. Same thing.
Oh my God. 1 minute, sir. The slides are not moving here. Now it's moving, sir.
Has come.
Now moving.
GST and overview. This appointment will be required. Apportionment will be required input tax credit of IGST.
Right. Now it's now IGST rate will be double the CGST rate. IGST and CGST rates will be uniform all over India and will not vary the state to state. So presently, the SGST rates are also uniform all over India, right? Revenue from IGST will be apportioned among the union and states and parliament on basis of the recommendations of the Goods and Service Tax Council, right? Now, apportionment will be required. ITC, IGST can be used in the GST and vice versa. Since IGST will be on the supply of goods and services, IGST will be payable on the interstate stock transfers and branch transfers. However, GST and SGST, UTGST and IGST will not be payable of the goods and sent to the job. This is very important. Suppose if you send the goods to the some job work basis, so no need to any pay taxes. So this is either CGST or GST or UTGST or IGST. Suppose if you send the goods to IGST some other state for the purpose of the job work, so no need to pay any taxes. Just you give the bill of supply. That's all. And delivery challan copy and e-way bill and all this. So CGS, suppose within the state also, if you are sending the goods to the purpose of the job work, there is no tax on that. Next. So moving, sir, now limitations of the current tax regime. Cascading effect of the
No,
tax.
sir, no, sir. Same slide is there, apportionment.
अरे यार देख लो ना यार इसका problem क्या है? So it's not coming, sir.
Now it's coming limitations of current tax regime.
Correct. Right, sir. That is that slide only. Limitations of the current taxes. Now, what is cascading effect of the tax? Earlier, see the credit, the CST is not available in earlier. CST is not available. Now, the moving of the goods from one state to another state, then it's very eligible for GST, ITC, either IGST, ITC also is eligible to take the ITC. That is called a cascading effect of the tax Maharashtra. And now the credit of the excise not available. Earlier it's excise and VAT and whatever it's there. We are not in, suppose they charge for CST and excise. Suppose we procure the goods from the other state, like excise and CST. So we cannot claim any ITC. But it's that difficulty is removed. Now we can claim IGST and whatever they charge, everything we are eligible to take the credit. That is the next. The multiple registrations. Now it's coming as a excise and service tax. Yes, sir.
Sir, no. The same thing is there, the limitation. Now it's okay, multiple registrations.
Yes, okay.
Yes, multiple registrations.
Yes, sir. Students, now it's I'm talking about earlier in the erstwhile law, we have so many taxation tax mail, like excise, VAT, so many registrations you have to take. Service tax registration, entertainment, central excise, luxury tax, all these registrations you have to take, and you to maintain the books of accounts and so many books, and you have to this. Now all this it's a remote. Now it comes to all this. It's a subsumed in GST. It's a one tax, that is goods and services tax. So lack of uniformity, right, sir? Lack of uniformity.
Yes.
Yes. Lack of uniformity. There is a lot of changes in this. See, in earlier entry tax in Maharashtra, the Gujarat, and entry tax, value added tax. These are all this some uniform state government to state government in the different tax rates. So Maharashtra having one good different rate, but whereas in Tamil Nadu, in Telangana, it's a different, same goods, but the different rate of taxes. Now all this removed all these difficulties after coming the GST. So that uniformity it's now. So all over India, one tax, one nation, right? So all this, you see that entry tax earlier, it's sometimes no entry tax in Maharashtra. Now the same goods move to some other state to Gujarat, again entry tax is applied. So a lot of confusion. All this removed all these confusions. Now so GST, it's subsumed all this type of state taxes and central taxes. Now goods versus service taxes, right? It's coming, sir. Goods versus
Yes.
right. Goods versus services dilemma. Now earlier you see that license software. We don't know what is that. So software, it comes to the goods or services. So that is some lacuna is there. So a lot of ambiguity is there. Now, after GST, these are all, it's removed all these difficulties. It's very clear. It's a dilemma. There is no dilemma. Now it comes to license of software. It comes to one, either services or goods, all this. So there is no confusion on this. Sale of food and restaurant. Earlier we went to the restaurant to take some idli and all this, eat the idli. So we don't know what taxes you have to pay, either service tax or sales tax. Now it's a clear, the restaurants, all comes to the services. So a lot of ambiguities are still. Now, benefits of the GST, very clear. Now it's benefits of the GST, right, sir?
Yes, yes.
So reduction of the cascading taxes. So cascading taxes, so many overall reduction of prices, common nation market, benefits of the small taxpayers, self-regulating tax system, non-interactive and electronic tax system. Now, silent features. GST would be applicable on the supply of goods and services. So it would be the single GST, the any time out of which 50% goes to central government and 50% will go to the state government. Now, central tax CGST and state tax SGST, UTGST. The GST would be applied all the goods and services are both other than alcoholic and liquor. Students, I raised one question: why it is alcoholic and petroleum products out of GST? Just tell me why it is for alcoholic and this petroleum products out of the GST. Anyone can tell me, please. Yes, sir. Yes. Come on, students. Tell me why it is out of that alcoholic, out of GST for alcoholic and this petroleum products. Someone has to give an answer.
Sir, this is Sandeep.
Yes, sir. Tell me, tell me.
Because government get more income from alcohol and from petroleum products, sir.
Yes, yes, you are right. Perfect. The state government will get the more revenue, more than that 33% is the petroleum and alcoholics 167, 170. So major revenue it comes to the, so last year, 2021, 3 lakhs of the revenue it comes to these products only, these two products. So major revenue it comes to the, so all the GST councils are not accepted these two products. That's why under control by the state government is controlled by the both alcoholic and petroleum products. Next, destination based, already we have conceptions, the already discussed this. So it comes to nutshell. Only value addition will be taxed and the burden of tax is to be borne by the final consumer. Any value addition will be taxed. Suppose, for example, I give you one example. Suppose say 1,000 rupees, I buy some material with a 12%. Suppose same material I have sold out in their supply to the 100,000 rupees plus adding my 20%, 1,200 rupees. Whatever addition of the 200 rupees, that liable to pay taxes. Whatever addition, but who has to burn all these taxes? The consumer. Ultimately, the final consumer has to pay these all taxes. Right. Coming to the exports, tax free of imports, taxed at the same rate and integrated tax, and levied on interstate supply, unlike domestic products. Next, now aggregate turnover. Aggregate turnover is the finance clear up to this is 40 lakhs would be exempt from tax, right? And special category only 20 lakhs. What is special category states? We have discussed also Andaman, Nicobar, Lakshadweep, Chandigarh, Ladakh, all this comes to special categories. They have only 20 lakhs and 40 lakhs for the regular taxpayer. Small taxpayers with an aggregate turnover in the financial year, 1.5 crore shall be eligible for composition levy, right? And then integrated tax would be levied and collected at the center interstate supply of the goods and services. Taxpayers should be above 1.5 crore and below 5 crore shall be used 2-digit. And there is a raising of invoice. There is a HSN code, it's mandatory for on invoice. If we exceed below the 5 crore, then only we have to use for 2-digit code and above 5 crore, 4-digit code. So services, if you do any services, then it comes to service account code and SCAC. Exports and supplies shall be treated as zero. Right now, it comes to the export. Suppose I give an example. Suppose if you supply the goods to exports, then what is the rate of tax? That is a zero rated of supplies. Zero rated supply. No tax payable on exports, but ITC related to supply should be refunded to the exporters. This is very important. Earlier, we cannot claim this. But now the facility is there, the zero rated supply. If you do the exports the goods, then we are eligible to take the refund of this. So the separate chapter is the refund also, right? Import of goods would be, sorry, it's coming in the slides. Sir.
Yeah, now some problem is, okay, now it's okay.
Now it's okay,
Okay.
sir.
Okay.
So import of goods and services would be subject to IGST and in addition to basic. Now it's a basic customs duty. All taxes like additional excise duty and local state tax, VAT, and all this is subsumed, but basic customs duty is not removed. So basic customs duty I will able to pay. Whenever you import the goods, we have to pay basic customs duty. In addition to IGST you have to pay, but later we can take the ITC, but basic customs duty we cannot claim. That's a basic customs duty you have to liable to pay. Next are rates. Now it comes to rates already discussed. And 0% essential items like rice, wheat, and all this comes to 0%. There is no tax. Items like mass consumptions, regular products like consumer products is a 5%, 12%, 18% standard rates in covering and manufacturing items of service. 28% is a luxury items like masala items, tobacco, aerated drinks. All these comes to luxury items or 28%. Now, coming to this, who has to notify the government? Who has to rates will be who? The government notified by the goods. The government has recommendations of this GST council. You know that GST council to recommend that these goods are to maybe it's a changes. So that's why last 4 or 5 years, so many notifications to change of the CTR, central tax rates has been changed on basis of the recommendations of the GST, recommendations of the GST council. So many rates are changed. Earlier it's 25%, 28% that the implementation of the GST, it's a 28. It comes down to slowly, it's 18%, and some of the goods comes down to the 12%. Some of the goods are 12% to 5%, 5 to 12%, 12% are 18%. So these are sorry, some disturbance is coming, sir.
Now, okay. That I will.
Right. Now, so your slides are GST rates, right, sir?
Yeah.
So these notifications has to be any changes. GST council has to take the decision. GST council is the head of the GST council is the finance minister of the central, as well as the Ministry of Finance and state finance ministers. All the members have decided these rates. Either increasing, thoda increase karna hai, nahi to decrease karna hai. So they take the decision. The recommendations of the GST council. Now it comes to some of the goods. It's not the goods and services. There is no goods answer. So there is a between the employee and employee relation and services by any courts and tribunal, functions performed by the members of parliament and state legislatures, and duties performed by the constitutional functionally, and the duties performed by the chairperson, a member of the director of the body, and funerals and sale of land. Now it's a sale of land. Sale of land, there is no tax on that. And sale of buildings subject to clause B of the paragraph schedule 3, and actionable claims under the lottery and betting gambling. Now, just as students, I am giving the tips of this. I am giving 60 tips. This is very important for you. So one sentence or answers. Now it says it's a GST stands for goods and service tax. So the same slide, sir.
Yeah.
So this is the tips. The one side answer. It's very useful for you. Just I go very fast. For the GST stands for goods and service tax. GST effect from 1st July 2017. GST destination based on consumed goods and services. So idea of the introduced GST is made in 2000, but is implemented on 1st July 2017. Basic customs duty, still it's a subsumed, is not in subsumed in GST. I told you last time, while importing the goods, so it's not basic customs duty, it's not subsumed in the GST. For the purpose of the GST Constitution, 101st Amendment 2016 was passed. Two components of the dual model, CGST and SGST. Rate of taxes are 0.25%, 1%, 3%, 5%, 12%. And IGST will be levied and placed of this CST. So now discussed in CST, wherever if you goods movement from one state to another, earlier the CST tax is liable to pay, and we pay the taxes of CST. So now it's IGST will be levied in place of central tax. Now CGST and IGST will be levied in place of value add tax. You see that earlier it's a VAT system is there in a state government, and so all states. Now it's instead of the VAT, the CGST and SGST will be levied. Every person registered on the GST shall be issued unique number. PAN-based GST number will get. That also how it comes to the GST PAN number also will explain. The administration and levy of GST follows center and levy. The administrator of all the CGST and IGST and states will levy and administer GST. More than 24 returns. This is a very tough job for us to taxpayers to file the 24 returns. Sometimes more than 24 returns they have to file every year. So see, now returns are this, every monthly returns has to file one R1 return and 3B return, and every month 2 returns has to file. And similarly, and after financial year it's completed, again we have to file its audit returns, and any other returns also sometimes it has to file. It depends on taxpayers' activity. Now tobacco and tobacco products of commodities are kept in out of prison. Now this is the 20th Constitution 101 issued. Sir, this is all, it's a single line answers, very useful for students. This is if you go for any exam also, so this is very useful.
Yes, yes, okay.
Yes, sir. So GST Council is the apex constitutional authority, decide the policies of the GST. So at the time of implementation, Arun Jaitley was the finance minister of India at the time of implementation of goods and services tax. Arun Jaitley is the chairman of the GST Council that day. And 1/7/2017, the constitutional amendments of respect of the GST was made effective. Now, the Union Finance Minister is the chairman of the 279A of the Constitution Act. So Union Finance Minister of the chairman of this council. So he has to take the decisions. All the members, state finance ministers, like state finance ministers, as well as Ministry of Finance of the state, all put together, all the members, and out of that, all these members to decide the rates or any amendments at the central taxes or central rate of taxes, anything. They have to committee meetings every month. They decide the whatever decisions bind the GST councils. So GST council shall be elect and vice chairmen from the members. Article 366(12)(a). Goods and service taxes means in the supply of goods and services. There is the word is no word in sale here. Only supply and goods and services. Now, IGST is levied on the intrastate branch transfer. Already we have discussed, and this is the bullet points. Just go through this single word and single answer, single line. Intrastate branch transfers. IGST means interstate branch transfers or supplies. GST payable in the state where the goods and services both are finally consumed. Basic custom levied in the state of case of the import of goods. GST compensation cess shall be payable on the aerated drinks. Central excise shall continue in the following products: petroleum, crude and oil, diesel and motor spirit. Territorial waters of the 12 nautical miles inside the sea will be part of the state, so far as the GST is concerned. Next, Indian Constitution empowers 269(1) Government of India levy IGST in case of interstates. That is Article amended 269(1). Say if any movement of the goods from interstate, IGST in case of supply of goods. Next, increase of finance cost is not the benefit of the GST. Tobacco products shall be subject to excise duty plus GST, the following taxes. Next, tax can be imposed on entertainment and amusement. This is not there. Actually, this is wrong statement. In the state of Jammu and Kashmir, GST was implemented on 8th July. All the states are implemented in 1st July, only except the Jammu and Kashmir state, it comes to implemented on 8th July. So 7 days delay on that because of a lot of, so you know that it's a sensitive area of the Jammu Kashmir, And then we went there and a lot of discussions went on, and that's finally the Jammu and Kashmir GST also implemented in 8th July 2017. IGST maximum 40% rate can be levied. How it is comes to 40%? Cess also is suppose luxury motor vehicles and all this. So 28%, 12% of the cess has to be charged. Rough diamonds and precious, semi-precious stones 0.25%. Gold and silvery and platinum are covered in 3% slabs. And supplies merchant exporters are the point. This is very important. Exports. It comes to exports, where we have two exports. We have the deemed exports and direct exports. Suppose say that it's a you export directly the goods. There is again two options. One is with the tax, without tax. If you with the tax, if you collect the tax, we can claim that to IGST for immediately, and we can claim the refund. With the declaration of LUT, and you without any taxes, so whatever accumulated ITC also we can claim that or against the exports. That is what is that 0.01% slab it comes to if you export the goods through merchant exports. So you issue the invoice to the merchant 0.01%. The merchant exporter will export the same goods directly to the farmer. Sir, what are the documents he has to keep for this merchant exports? So merchant exports has to give the already shipment documents, and he has to register with the EXIM, and then work order copy, and all these documents he has to keep in merchant exporter. The similar documents he has to give the supplier. This is a mandatory document. Otherwise, we cannot put. We could not get any refunds also if you don't have documents. You have to within 90 days. Suppose if we send the goods to the merchant exporter, the merchant exporter has to supply the goods within 90 days. Within 90 days. Okay. GST Council is the government. This is very important, sir. GST Council and they registered with the ROC, the government company only. So he has also registered. Now it's coming now, sir. It's a 34.
Yes. Yeah.
Yeah. Now, 34 companies are given permission to act as GST. These are Suvidha providers. Government has given some permissions to.
What is this? Sir, should I mute all the?
Yes, sir. Yes, sir. You mute it, sir.
Yeah. Okay. You can.
Yes, sir. Now it's audible, sir.
Yes.
Yes. So government has given Suvidha providers to taxpayer to access the GST through them. So earlier it's at the time of the implement. So a lot of it's a new subject. So all taxpayers and all this. So a lot of problems to file the returns, to get the information from the GSTN. So government has given some Suvidha providers. They give the access to the GST through the taxpayers and this. So distribution of network and seamless flow of credit, uniform GST, all India, overall India, benefits of the GST of implementation. Now, the website also used for filing of returns, www.gst.gov.in. Now it's a cascading effect means charging tax on. This is, we have tax on tax. This we have our, this all difficulties are removed, cascading effect. See, suppose say in restaurant, if you go for that, they charge for service tax and this again is the VAT. So we have tax on tax. So these are the difficulties are removed now after implementation of the GST. Now, yes. So already we have discussed in the 4 bills of CGST and GST to GST and cess. So now it's a Company Act in Section 8 of this Constitution 15th September in 2016. And IGST stands for integrated. Now it comes to stamp duty is not in a subsumed in a GST. Supplies be the classified as GST through HS and SCAC. HSN stands for Harmonized Systems Nomenclature. SAC stands for Service Accounting Code. One thing it's very important for here, no person without PAN can apply the registration. PAN is mandatory while applying for registrations. Now it's audible, sir, very clear now?
Yes, yes. So now I think almost this time is also up.
Yes, sir. So just I go for this. Definitions, I'm skipping the definitions, sir.
Yeah.
Aggregate turnover and all this. Actually, these are the, I give it a PPT to you, sir. Just
Okay.
this you give to the students. Very important definitions I have mentioned here.
Okay.
I'm skipping these definitions. Yeah. Now it's a family. Family means they are defined in the GST Act. The spouse and children of the person, the parents and grandparents and brothers and sisters and person, they are wholly and mainly depend on the said person. So this is a family as defined by the under GST Act. Similarly, goods. Goods means every kind of mobile property other than the money and securities that define goods. The government means it's central government. Input relation to the registered person means the central tax. Now, this is a very, very important definition is a person. Person is the, now it's earlier in the Income Tax Act also person has defined, and the GST also person has been defined. In GST Act, define the individual, HUF, company, firm, and limited liability, and association of persons, any body corporate, corporate society, local authority, central government or state government, society, trust, every artificial judicial person, not for any artificial person, not falling within the and above. Now, place of business. So wherever we are, suppose if you do the business, that is a place of business where the business is ordinarily carried, and that is a warehouse or go down or any other place. The goods and supplies and receipts, all this comes under it's a place of business. The proper officer has defined. So no consideration is not required. Now it comes to the return. Works contract is a very big one. So I don't want services. Now it comes to services. Services has given defined only means anything other than goods. The means anything other than goods. It's a very single word. Services other than the goods. So now it comes to ITC. It's a big subject. It's a heart of the GST. So now it's ITC. When we are eligible for ITC, when we are eligible ITC, if you have course of furtherance of business, use it in the course furtherance of business. If you do the business in furtherance, then only we are eligible for ITC. This is very, very fundamental rule. If you don't have any furtherance of business, we cannot eligible for ITC. Now it's a ITC, sir. It's slides are ITC, correct, sir?
Yeah.
Right. Yeah. So the registered person shall not be entitled to take the credit any input in respect of supply of goods or both him unless they satisfy the conditions. Section 16.2. What is the conditions it has to eligible for ITC? Conditions for taking the ITC. Number one, is entitled to credit any input, supply of goods and services, both of it subject the following conditions. Number one, he has to take the position of the tax invoice, and he has to take the supply statements, outward supplies. He has to issue this, he has to communicate it to the either invoice and debit note. He has to receive the goods and both compulsory recipient. Now it's a taxpayer, supplier and recipient. We have to call recipient. Where the goods are received, he is the recipient. The goods are supplied, the supplier. Receive the goods and services in section 16.2b, the ITC in respect of the supplier communicated such a registered person, section 38, and being restricted to 16.2ba. Right. Next. Not only received, but the supplier has to liable to pay the taxes. Then only he is eligible. Similarly, the recipient also has to pay the whatever goods received. He has liable to pay the taxes and payment. Then only he is eligible for ITC. That's the what is the supply along with the tax payable there on within 180 days. If he's paid to the amount to the supplier, then only the issue of invoice by the supplier, the eligibility of the ITC would be added to the ITC liability. Yes. where the registered person claims the depreciation. Suppose say if any goods, capital goods, if you buy the capital goods, then he claims the depreciation on the component of the tax component, then he has eligible for ITC. It's a very important section for this. This is before making the suppose the entries in books of accounts. Then if you buy some capital goods, then we take the only net item. Suppose say 100 rupees of the capital goods, we have to take the fixed assets in books of accounts at 100 rupees only. Whatever tax component of the whatever 12% or 18%, you take the ITC, then you have to claim the depreciation on this only net of the value of the capital goods. Next, 1st January 22, CBI has made Aadhaar authentication registrations. This is Aadhaar authentication is mandatory for now. It's completed in the ITC. Now it's coming to the registrations. Sir, it's are you registration slide now, sir? Yeah. Aadhaar authentication is mandatory to apply for revocation of cancelled GST registration. So going for registration, then Aadhaar authentication of the PAN and Aadhaar is mandatory. Now, earlier it's a 20 lakhs and before 20 lakhs for normal category and 10 lakhs for the up to 31st March 2019 registration up to limitation of 20 lakhs and 10 lakhs for special categories. Now with the same thing is now it exceeds 40 lakhs, then the registration is mandatory and 20 lakhs in the special category states. So it's only except this all states except Telangana have not given any consent to the central government. Now in Telangana, if you exceeds the 20 lakhs, you have to take the registration. Other than Telangana, you exceeds the 40 lakhs, then you have to take the registrations. So now it's a new limits of that registrations. This is the same thing. It's some financial year and registrations and some registration. See e-commerce operator providing the platform the suppliers to make the supplies the goods and through. Now it comes. These are the mandatory for this compulsory registration of the e-commerce operators and RCM on this. Now the GST identification number. How to identify this GST identification number? The state code, first 2 digits, it comes to state code and permanent account number of the 10 digit, and one is the enter number of the same in the PAN of the holder of the state, and Z is the alphabet of the by default. It comes to check the digit. This is the GST number format. First 2 bits relates to its state code, and next 10 digits it comes to PAN number, and for the entity of the number, either one first business, second business, third business. Say suppose if we in state, if we have a multiple vertical business like first business, second business, third. Suppose if we have a multiple registration, it comes to 1, 2, 3 like that. Z is by default it coming, and check digit of the 5, the comma. Now it comes to beautifully this all account students is required for this accounts and required. What are the records has to be maintained? Now specified what are the records has to maintain. Like that it's the production of manufacturing records and inward output supply of the records and stock of goods and the input tax credit and output of tax and payable and paid. Now accounts required to be maintained the principal place of business where we have the registered, that place only we have to books of accounts has to keep related to places. Business mention certificate registrations such as books and accounts shall be included electronic form or data stored by any electronic device. Now suppose more than one place is specified in the certificate registration, the accounts related to each place of business shall be kept in the place of concern. And returns, this is very important. Returns, we have to file the 2 returns of regular taxpayer, that is R1 and 3B. 3B is for a tax payment and R1 is the outward supply, R1. So already we have discussed in place of supply and registration also we have discussed. mandatory for registration. These are the persons of the mandatory for registrations, persons making the interstate supply of goods, person required to pay the tax under revert charge, casual and taxable person, e-commerce operator, TDS, and persons applying the goods to the persons making the supplies behalf of the registered tax person and ISD, and every person supplying the online information, registration granted the wise, and PAN registration GST to be granted the state wise, PAN mandatory for GST, separate registration for permitted for multiple business verticals in the state. So already we have discussed why what returns has to file, and the GSTR1 is the information. Every month we have to file the 10th of this next month. So very easily to done by the computer, everything in the formats. Whatever we have raised the invoices, that's the same thing we have to file through GSTR1. Invoice level details, and so invoice details, number, date, HSN, value, taxable goods, compulsory. POS means place of supply. So where we are supplying the goods, we have to mention that. And tax IGST or CGST or GST, we have to rate of tax amount has to report in the invoice copy. So what are not required on B2C invoices? So 2.5 lakhs, consolidate information of B2C supply substance. And if we have only 1.5 crore, less than 1.5 crore, it's not required. So 2 and 3, it's not required. And standard forms of GSTR1, 2A automatic download, and 1, 3A, and 4. These are general regular forms. We skip up this. So now it's annual returns has to file. If we have a 2 crores and above, we have to file. We have to file the 99C. This is very important. First return and final return. What is most of the cases? What happened in taxpayers? Once if he have shut down the business, he closed the business, he has to file the final return form 10. Most of the cases, the businessman, the closer of the businessman, he forgetting that. Simply they give the letter, it just file the last return, but it's not filing the final return. Just give the surrender the copy, but he has to file the form 10. GSTR 10 has to file before closing of the business. First return for registration. Now it comes to the refunds. Refund, it's very important. When it comes to refund, only for that, the export of goods and services under the bond and letter of undertaking without payment of tax is eligible for that. Supply of goods and services to units and developers and the deemed exports, and the refunder of taxes purchase made in the UN agencies, embassies, refund arising the judgments and decree, and suppose refund arising when it is of account of judgment. Suppose if you have appealed, you paid some admitted taxes, then we have to claim. If you have after getting the orders, if you have won that case, then whatever amount we have paid to the department, then we can claim that whatever amount we paid, that refund we can claim. Decree or order. Refund accumulated ITC on the account of inverted duty. This is very important, sir. Why it is comes to inverted? How? See, my outputs are it's a 12%, whereas my inputs are it's a 18%. Whereas my inputs or invert supplies are 18%, and where the outputs are it's a 12%. Now the gap of 6%, we can claim that. We can claim the invert duty structure, that we can claim the refund. Finalization of the provisional assessments, excess balance of the electronic cash ledger. By mistake, we have paid that instead of the IGST, we have paid CGST and SGST. Then we can claim that whatever excess paid of this cash ledger. Excess payment of sometimes we have paid instead of the 1 lakh, we paid 10 lakhs by mistake. Then that also we can claim that excess payment of tax. International tourist, when it's any tourist it comes to in India, and then while you buy something and pay the taxes of this, and at the time of the territorial we can claim the refund also. It's the same day, he get the amount very immediately. And account of taxes of supply such is provided either wholly or partly, and time limit of the claim 2 years, and the input tax is allowed in case of exports with the same. So advanced ruling.
Sir, you can check up your time, please.
Yes, sir. 124. We can close it, sir.
There's so many, because so many things what you are going, in a faster pace, and they may not be having that much of.
Yes, sir. Yes, sir. Sir, I'm closing. That's all, sir. Maximum we have covered all this.
Okay,
Yes,
you
sir.
can,
Yeah.
you
Yeah.
can close it, because many of the students are leaving.
Yes, sir. If we have any questions for regarding this, we'll give the answer, sir. Please, we'll stop this meeting, sir.
You can close this PPT.
Yes, sir. Close. If any questions, then immediately we give.
Sir, close cheyandadi.
Yes, yes. Yes, sir.
Yeah. One thing is that, the one thing I'm telling you. All the students, I think he was so excited, and then he gave actually more than, while he was talking, he gave those, the presentations were self-explanatory. That is what we could find it. And students have got a lot of information because of the time limit. He's got so much of a storehouse of knowledge of GST. He tried to touch on many issues, and he's also feeling, he's also feeling somewhat unsatisfied, if I'm not wrong. Unsatisfied in the sense that he wanted to give that, deliver lot of things. Okay, so we have got a good experience in that, and so many points. This is the he can talk about each point like this reverse charge mechanism, or this reversal charge mechanism, or a composition tax, about the registration. Am I correct, sir?
Correct.
Each point is a one topic or this thing.
Correct.
That I think, and in case of the filing of the returns,
Correct.
that's for a big or small, like each one is a topic on exports. Am I correct, sir? Each in a
Correct.
detail. So that's the reason, as a practitioner, we need to have that. And we should, sir, we thank you. We thank you having spent the time. It is, I think, 1 hour 30 minutes. Many of the students, half of the students, we give the time as a mistake. So, not that they're not interested, but they've allocated the time, normally that. So, if you have any doubts, you can ask. Then we close it. Students.
Yes, you make it unmute to all the, sir. Then
Yeah. No, they can. Please unmute, all of you. Unmute the mics. Please unmute the mics, Sandy, all of you.
now I raise one question to student. What is RCM? Just you tell me what is, when it is applied for RCM. Anyone can. What is RCM?
I told you about the reverse charge mechanism. That is RCM. Okay, sir, because they have already lost, I don't have so much of time. Okay, I request all of you, please give him a big hand. Thank him. Please unmute the mics and then thank him. Hello. All of you, please give him a big hand.
Thank you,
Thank you, Chapandi.
Thank you, sir.
Thank you.
Thank you, sir.
Tapatlu kuda kottandi. All of you. All of you. Okay? We thank you. We thank. Yes, sir. Thank you, sir.
Thank
We
you.
close the session.
Yes, sir.
We close the session. Thank you.